we're going to start soon. All right. One more people. Thanks again, guys, for joining the meetup again this month. And I think it's kind of a first for us. This time we are going to talk about prices and market. We used to do this. Actually, we started this meetup since 2019 every month and focusing on the tech. But I know that a lot of you guys requested someone who know what's going on, a trader and not a small company. So I will let him introduce himself in 1 minute, but just keep adding some people. Please use the chat if you have any questions for our guest, and I will relay the questions. Unfortunately, I don't allow people to speak, otherwise it's a bit of a mess. And you can, on Facebook, you can just actually post your comments on the chat. I will read them and I will pass it on. So before we start, so welcome everyone. So I'm Max. I'm Maxime Paul. I'm the co-founder of Atato. We are a digital asset custody business based in Singapore, and we are actually doing this meetup every month. And this time we have actually someone who is going to talk about the crypto market in general. It's a company that I personally know for more than 5 years now. One of the largest over-the-counter trader company. Based in Singapore, and thanks again for joining everyone. And I will our guest Stephan from OSL Singapore. I will let you introduce yourself, Stephan.
Hey Max, first of all, thanks very much for having me on this evening. Pleasure to talk to you all in advance, and looking forward to sharing some insights and thoughts of how we at OSL are currently looking at the market structure. A quick introduction to myself. My history is in TradFi markets. So I was a FX and commodities sales trader for 7 years in the UK and Singapore before I fell pretty aggressively down the crypto rabbit hole back in 2020 and decided to make the jump full-time onto a sales trading desk at OSL. At OSL, we are one of the oldest crypto, or the most developed and oldest crypto trading companies in Asia, especially on the OTC side. We've got backing by Asia's leading public fintech and digital asset company, BC Technology Group, which is under ticker HK863. And we are the first and only so far crypto company in Hong Kong that has received full SFC licensing under Type 1 and Type 7. We offer prime brokerage, custody, exchange, and SaaS services to a variety of retail, high net worth, corporate and institutional clients around the world. In Singapore, we are grandfathered under the MAS, and we are operating there whilst we were waiting for a license under the Permanent Services and Payments Act, Payments and Services Act. And the focus of Singapore at the moment is the OTC trading, electronic trading, whilst also keeping our client assets secure in fully insured wallets.
Cool, but that's quite a lot. So just why did I invite OSL? As I mentioned, it's a company I know personally for 5 years. At that time, we were looking for over-the-counter trading, not as an exchange, but over-the-counter tradings. OSL was based in Hong Kong at that time, not yet in Singapore. And they have been quite an excellent service. And I would like, before we start, a lot of people don't know what is OTC. Very familiar with traditional exchanges, especially in Thailand and Singapore, but what is OTC?
So OTC trading is essentially just two trades or two counterparties trading face-to-face or bilaterally off an exchange. Whereas normally you would sign up to an exchange such as Binance or FTX or Huobi and trade directly on the exchange. For larger institutional clients that actually want to trade in much larger sizes, be it 100 Bitcoin, 200 Bitcoin in one clip, it's much more efficient for them to come to a company like OSL and trade directly with a live trader. We as OSL have a variety of liquidity providers in the background where we then take your order and actually distribute it amongst those LPs. What that does is ensure that you're less likely to spike the price on one individual exchange. You know, imagine if you send 200 Bitcoin to Coinbase and try and sell that all in one clip on their exchange. Order book would be completely filled, you'd crash the market, and you'd get a very bad price execution. I'd actually like to share my screen at this point and give you a more visual overview of how the OTC desk works.
Sure.
Because there is a good website there where you can actually see that. So if we go on to, where's my BTC combined order book?
Yeah.
So this is essentially on coinglass.com, a website that for those of you who don't know, I would highly recommend. What we're looking at here is the order book for FTX. And we can see that if you wanted to buy 500 Bitcoin or so, let's refresh this. I wonder if it's going a little bit crazy. If we want to say we want to buy, let's go with 300 Bitcoin on just FTX. What you're essentially doing is paying roughly $39,100 if you only go to FTX. If you are now to actually aggregate a multiple of order books from various other exchanges, in this example, we'll add in Huobi, we'll add them all in together, you can see how that order book is suddenly much, much deeper. And instead of paying $39,100 to buy 300 Bitcoin, you're now only paying $39,040. So not only do you get a better price, but you also get to distribute your trade amongst all these exchanges. Now, it's important to note at this point that you're not actually trading against these exchanges. You only have one counterpart, which is OSL. OSL being licensed and regulated in Hong Kong, being listed on the Hong Kong Stock Exchange, we, by the very definition of that, have a much better credit rating than these unregulated exchanges. So an additional thing to look out for as well is that you see when there's high market volatility going on, and you see a lot of the retail-focused exchanges actually going down for maintenance or stopping withdrawals, stopping coin deposits. If you trade with OSL, because we have this large selection of liquidity providers, in the event that in times of higher volatility, one of those providers goes down, we still have access to all the others. And that ensures price execution around the clock without the risk that you suddenly can't trade.
And so basically OTC trading is for large orders, mostly.
Exactly. The larger, the better. So on the OTC desk, we'll normally only really start to look at ticket sizes with a $250,000 notional. Mm-hmm. On the stablecoin side as well, we use heavily as a stablecoin flow broker. So if you as an institution want to buy 10 million, 20 million, 30 million USDT or USDC, you're able to do that in one clip, which on a retail exchange, again, would be tough. But because our banking partners are, US banks, Silvergate, Signature, that are well known in the market and respected, you can actually move large chunks of US dollar notionals around without getting questions or having any limits put in place.
Okay. And so we're going to talk about the market a bit later, about what's going on, but just as a process of how it works. I mean, it's a phone call and I'm calling you, I say, okay, I want to buy $10 million worth of Bitcoin, or how does it work in?
So we actually just monitor chats. We have the majority of our trading takes place over WhatsApp and Telegram. Quite a big change from when I was doing everything on Bloomberg before at a bank. So quite an eye-opening experience. But if there's a trading channel that's approved, whether it's Slack, Telegram, WhatsApp, WeChat, even Bloomberg chat, we're happy to trade on all those channels. We have a trading desk in Singapore and we have a trading desk in Mexico. And so between the two of us, between the two teams, we cover 12-hour shifts, and that ensures then those chats are monitored 24/7. So no matter even if you can't access your account at any given time, as long as you have your phone and have WhatsApp, in theory, you can trade at any moment, a given minute notice.
Right, and that's pretty cool. And I know that it's in a way quite fast, but can you tell me, if I want to buy $10 million worth of Bitcoins, how fast it is? Do I need to wait one?
I can tell you a price within 30 to 40 seconds. We have everything set up, and would essentially be able to show you live pricing. It's very similar to trading in the traditional markets, where we'll show a price. If the price changes, we'll just type in a new price, and it's all done live. As soon as you confirm the trade by saying done on your WhatsApp, that trade is locked in. and you're done.
Well, okay. And so I guess this is how all the big orders that we are seeing for micro strategies or even institutions are gone through, maybe through your company or some others, right?
Absolutely. There's a variety of ways that you can actually execute these trades. Some of our clients will simply come in and ask for a live market order, for a live price to buy and sell. We also have more sophisticated execution software to our availability. So whether it's the use of VWAPs, TWAPs, other algo orders, where you essentially tell the machine how many clips of Bitcoin to buy at certain intervals, just to ease the position into the market, further reducing the price volatility that such a trade might have associated with it if you were to try and do the entire thing in one go. So there's a variety of strategies that we can actually employ.
Okay, so your clients are who exactly? Like what we call whale, or it's even corporates or so on? What's kind of the ratio? Like, can you let
at the moment, I would still say that the majority of our clients are on the retail side, but okay, the majority of flow, 90%, 95% of our flow is actually coming from our institutional clients. And that just goes to show how important that will be.
Okay, so clarify this point for everyone to understand it. You said that the most the most important segment is retail of your clients, but what is the flow?
The largest number of clients is retail. So if we have, these are our clients, this like half might be retail, the other half might be corporates, but the trading volumes that are generated from those entities, 90%, if not more of that is actually from the corporate and institutional space.
Oh, wow.
So in that group, you have hedge funds, whales, financial institutions, family offices, even some corporates now. It's just developing at an absolutely crazy pace.
Wow. And did you see any kind of increase in institution trading those past, I would say, 2 years, or is it like very recently?
Yeah, absolutely. The trading that we've seen a big increase in is on the institutional side, not least since we got our regulatory approval in Hong Kong. So as soon as that happened, all of a sudden institutions who are trying to enter into an industry that historically is seen as very shady, very dodgy, all of a sudden they have an institution that is regulated, listed, licensed, insured, PwC audited. A lot of those risks, a lot of that kind of that need for trust in an unregulated entity disappears. And all of a sudden they have an easy and functional way to trade or get exposure to cryptocurrencies with an institution such as ourselves.
So are the institutions like mostly likely to trade on OTC trading or on large exchanges like Binance or FTX?
It's still split. I mean, you would argue that Binance and Coinbase are your main competitors. But on the OTC side, it's starting to grow more. One of the big benefits of OTC is that the trades that you do is more anonymous. Normally, if you visit an exchange, you see an order book, you see all the orders in there, and you go, oh, there's somebody there looking to buy 10 million Bitcoin at 39,000. If you go to us on the OTC side, none of that is visible. It's purely bilateral. So the information about the trade is just between you and I.
Okay.
It ensures anonymity, and it also allows you to customize the sizes of the trades that you want to do. You can split it up, you can put it all together, and you don't have to have anyone from the outside prying and trying to understand what you're trying to do.
All right. And that's a very important point, right? Because we often see like, okay, institutions are coming in, oh, the price is not moving up. How come if those people are buying like thousands of Bitcoin, right? So those trades happen on companies like yours, right? And but I would like to know in a certain extent, okay, let's say that we see a lot of institutions actually buying. Obviously, like there is a limited supply. So does it has a big impact on the price, or is it like completely outside and the price stays on the exchange?
I think at this moment in time, just given the overall market sentiment, not only in crypto, but also across traditional finance, there is just a lack of demand at the moment. Yes, supply is increasing by 900 Bitcoin a day. But what's also interesting to note is that when when we actually see a turnaround in the equity markets, I think we'll be in for a serious supply shock. If I might actually share my screen briefly
go ahead.
again. What we can look at, or the beauty of obviously is with cryptocurrencies, is that you can see everything online.
Yeah.
One thing that we can see here, which goes to show that crypto adoption is continuing unabated, is the number of non-zero balance addresses purely increasing despite the lack of interest right now and the consolidation that we've seen over the last year and a bit. The number of wallets with Bitcoin in them is increasing, and not only the non-zero amounts, but also the one with just over 0.1 Bitcoin. And also now we're at a stage where actually the largest wallets in the market, so those with more than 10,000 Bitcoin, are actually starting to accumulate at these positions again, or at these price levels. This is something that you only really see during the corrective phase of a market. So as the price increases, that's when you normally start to see the larger wallets selling their holdings. And this has stopped, and indeed has stopped since the last 9 months, and the accumulation is beginning again. Okay, so you mean that like when we see those large wallets like accumulating, we are expecting to have like an accumulation phase, so basically a flat market or something like that? Exactly. Normally you'd expect to see these when larger holders of coins sell their positions, just because they are selling more and hold a larger amount of coins, you would expect that to have a negative price impact. What we're now seeing is that prices are actually staying somewhat elevated because, and we've seen this on the trading desk as well, is larger buy orders slowly starting to come back into the market. Okay. This is, it's something that we tend to look out for because it's not known too well. I mean, the information is all available. But it's these larger coin addresses that historically have tended to drive where the price goes. Okay, so that's one of the prime indicators to look at if you want to have a sentiment on the market, is it? Exactly. Okay. That, and then the other one to look at is exchange balance. So actually looking to see how many Bitcoin that's held on exchanges is, or how that is changing. And one thing that we've noticed that, normally you would expect that in a market where prices are going down, people are selling, you would expect to see on balance volumes actually go up as people load Bitcoin onto the exchange to sell them into the market. What we've actually seen is the complete opposite. So the reserve Bitcoin amounts on exchanges has been going down and has only actually started to increase further. So people are taking coins off exchange, holding them in their own wallets. And that doesn't really imply that there's too many sellers out there in the market right now. Yeah, but then just to take this last point, so it means like if people keep their cryptos on their wallets and don't plan to sell, right, just holding them, well, is it not like a limitation of supply and people just keep and they don't sell, and so it means that the price should be on the high side, or do I get it wrong? No, definitely. And over the long term, we've only ever really seen Bitcoin go in one direction. This is there are large, intra-week, intra-month, even inter-year swings. But when you actually zoom out and look at the price percentage growth here, so we're looking at the logarithmic chart. It only ever takes 4 years for you from at any given point when you buy Bitcoin. The longest at this moment, up until this moment in time, that you've had to wait is 4 years to actually start to see a positive return. The percentage of coins moving into wallets that historically never have had any outflows of coins is just growing. It's just growing at this moment in time. And okay, thanks. And actually, can you keep this chart actually, because there is something kind of I would say important compared to the crypto world that we have seen since 2012, 2013, is that there is in a way less volatility during those past 2 years than what we have seen before. Am I right, or is it on the way it's kind of flat if we want to see the volatility? I mean, we have yet to see a 80%, 90% pullback in crypto prices, as we indeed saw back in 2018. So I think from the peak there to the low, that was an 82% correction. From here at the moment, over the last few months, we've seen a 50% drawback or drawdown. I don't think that we will see the same amount of volatility in Bitcoin as we have seen in the past. That just is a matter of the fact that the crypto or the Bitcoin market cap is just getting bigger and bigger, currently at 1.8 trillion. The volatility that cryptocurrencies really are associated with and known for, that volatility definitely still exists in the altcoin space, where the market cap is smaller and it just takes less capital to flow in or to flow out to make that price move in larger amounts.
So it's a good point, and actually I would like to rebound on one question. Is like, since there is much more hedge funds and institutions which enter the market, let's say since 2020, and compared to before, what are the drastic change that you have seen on the market in general? I mean, more swings, more volumes, more manipulations.
The volume is much bigger. What we have seen as well is a big increase actually in the amount of leverage that's taken. Leverage, the use of perpetual swaps, just to give an investor, even give the hedge funds that are entering the space, just a better way of allocating their capital. If you can take a 20x leverage position, you only have to front a 20th of your capital. You can do more trades. You can manage that all much more efficiently. Of course, that leads to much more risk because
your leverage,
you have liquidation levels. Again, that's something that we can actually monitor on CoinGlass as well, where we take the funding rates. So these funding rates essentially show how much leverage is being used among institutions, actually by any sort of market player on these exchanges. Usually funding rates will tend to be slightly positive. Essentially, it's the mechanism that fixes the spot price, i.e. the market price where you physically buy and sell Bitcoin, to the perpetual swap price. And the perpetual swap price is cash settled. You can use leverage on it. And normally in times of high euphoria, especially, I mean, look back when we were all-time high back in November, you can see this funding rate being much higher. That is to say, the cost of borrowing money to go long in the market and use leverage in the market to the long side was much more expensive. Now we're at a stage where these funding rates are actually now moving the other way. So you have to pay if you want to take a speculative short on the market or use leverage to the short side. And as you have these stretched longs when we're at the top of a market cycle, you can use this as one of the kind of indicators and signals that we might be close to or nearing a bottom when the entire market is bearish and is willing to pay that premium to actually be short the market.
So if I recap a bit, like all the indicators that you gave us, it's quite a lot of information. And again, please use the chat if you have any questions for Stefan and if something is not clear. But so you have like the largest Bitcoin addresses, and you can see if they are accumulating or selling. The number of coins on the exchanges. And then you are saying on the funding rates. That's the kind of three keys that give you an incentive of the market. I mean,
there's for sure there's more. I think actually looking at the chart, what's interesting, we all know this chart, but it's not actually a chart that is too original or too new. This is a very similar, or the price appreciation here is very similar to when you compare it to other growth stocks, be it Amazon, Google, Facebook. Over time, and let's look at Amazon briefly. You can actually see that since Amazon's inception, it's done something relatively similar, where on a normal chart, it just looks like it's absolutely exploded. But when you look at it on a logarithmic chart, it's actually just been trending upwards in a very nice straight line, more or less since 2000. This just seems to be a case of network effects, Metcalfe's law, the idea that something has value as the network around it grows, very similar to mobile phones, where one mobile phone isn't used to anyone. Two mobile phones starts to have some value, 3, 4, and so on. You suddenly build this network. And this definitely seems to be the case with Bitcoin as well, and where I personally believe a lot of the value derives from. If we look at the active number of addresses going up, that network of addresses building, people buying into the space, that in turn seems to be, you can kind of compare it to the growth stocks. And I think at this moment in time especially is why the correlation to tech growth stocks and the NASDAQ especially are at such highs.
Yeah, okay, and I totally agree. And I have, if we keep this chart in some ways, do you think like the narrative that changed a bit in Bitcoin, I would say those past 2 years as a store of value, hedge risk against inflation, is it something that matters for your clients, or you think it's not really?
I think this is a tough one. I think it's always nice to have a narrative when a price moves, and definitely, over 2020 when we had the quantitative easing, 60% of all US dollars in circulation being printed in the space of 18 months. Yes, I think that was a strong narrative to have. I have yet to find a company that in their annual report states our treasury is buying Bitcoin to hedge against inflation. Just because
there is one. There is
one.
There is MicroStrategy, which is now their business is basically buying Bitcoin, right?
It is buying Bitcoin, but have they said that it's to fight inflation, or whether it's just a depreciative asset that will hold its value over long periods of time?
I think Michael Saylor might have said it, but I need to verify again.
I mean, they might well have said it. In my eyes, the thing is that at this moment in time, companies, unless you're run by somebody like Michael Saylor, who's been the CEO for 18, 20 years and can have that long-term view, most companies seem to, especially those publicly listed ones, will seem to operate on a quarterly or yearly basis, where it's yearly revenues, yearly numbers, the whole reporting and accounting is done on a yearly basis. And unfortunately, we're still in a situation where Bitcoin's value can change from one month to the next in a hugely negative manner. Until we start to see Bitcoin's volatility actually becoming much lower and arguably coming to that level of gold, which I don't know if it will ever happen. I think the inflation narrative it's a nice story, but I don't think it's 100% true. I think that'd be too simple.
All right, but no, I appreciate the feedback. Actually, it's quite a good argument. And but then I will pick up on the volatility. Then there is some coins on the market. I mean, there are some coins on the market that are much less volatile, which are stable coins, right? Which people
You'd hope so that they're not volatile.
We hope that they will stay paired with the US dollar. But I mean, what we are seeing in our industry as a custodian is that a lot of corporates are actually now willing to buy USDC for payments of their suppliers if they are in Web3.
Yeah.
To basically today, if you work in crypto, most of the people that you are going to transact with are going to ask you for payment in digital assets.
Yes.
Do you see clients coming to you as for buying stable coins and using stable coins in their business?
Absolutely. It's becoming, now that you suddenly, a stable coin essentially opens you to the world of being able to transact a coin, which in theory has its value 1-to-1 against the US dollar, but you can trade it around the clock on weekends without having to wait for your bank to open. You can move it across borders seamlessly. We have multiple corporates that will have operations in countries such as or in countries within Africa, for example, where moving money in the TradFi space, moving local currency, has restrictions. That becomes very difficult if you have international corporates who might have their headquarters in the US or in Europe or in Asia, but actually have operations in these local countries and struggle to actually work with the local banks to move capital out of that. So we have clients who team up with local entities that will actually sell or buy the local currency, sell Tether or USDC, and that in turn can then be moved easily back into Europe, into the US, into Asia. And not only is it done easily, it's also done instantly. In the past, moving traditional currencies across, especially out of the higher risk countries, that could take 7-8 days to clear through all the banking processes, get all the approvals, and that's just too slow these days.
Yeah, I totally agree. And the funny story is that it's because of those high fees that actually went into Bitcoin back in 2013 when it was difficult to send money abroad. Yeah. So at least it has one use case at that time, but the fees were much cheaper than they are today. But it was another story. So some of your clients basically are trading stablecoins only, or is it
a lot of them will, like, it depends on the corporate. There are some corporates that are just happy now to accept stablecoin payments and will stick to trading in that. But it's a good thing, right? We're happy to see corporates that essentially, sell services, whether it's flight tickets, whether it's yacht chartering, who just service richer clients and are happy to receive payment in stablecoins, knowing full well that they'll have a partner like OSL who will then switch that stablecoin 1-to-1 against the US dollar and will pay that out into a bank account. It's a very quick off ramp, and we're seeing a huge increase in the amount of stablecoin flow. I would say the majority of the flow that we see will actually be on Tether and USDC.
Okay, is Tether still the number one?
For now, but USDC is catching up, and more interestingly, for a lot of our larger clients, they're now actually very interested in UST. So because of away from the centralized stable coin to an algorithmically pegged on the Lunar Exchange.
Are you sure it's because of the technology, or it's because Anchor protocol is offering 19% reward?
There's a high likelihood. But again, it's the clients, it's the hedge funds, it's the family offices, it's the high net worths who want to have exposure to those sort of coins, and take advantage, earn an interest on these stable coins in a market that has essentially been consolidating for Bitcoin for the last year and a half.
All right, and following, so just for the people on the chat, and I see your questions on Facebook. I will just ask them to Stephan a bit later on. Before we go to kind of a trading analysis, I have a questions that people ask me quite a lot. Is Bitcoin still the number one in trading, or altcoin in general as a volume is bigger than that?
So for OSL, we still see the majority of our trading in Bitcoin and Ethereum. We believe this is purely because of the clients that we're trying to service on the institutional space. It's their first real dive into cryptocurrencies. And Bitcoin and Ethereum, obviously completely two different products, but they are the flagship, so to speak, of the crypto space, whether it's just the old school cryptocurrency Bitcoin trading style, or the more advanced smart contract platform. They're just the ones that are the most known. They're still by far and away the largest two coins. And in terms of having been around the longest, having gone through the various trial and errors and hacks, and still being around, they are.
Sorry, Stephan.
That's okay. Where did I get cut off?
Oh, that you see that just that Bitcoin and Ethereum is still the number one, but
we're seeing a growth in demand for the smaller altcoins.
Okay.
Big problem it's not a problem. It's actually a very good thing. Trading with at OSL, having the licensing, having the regulation, we need to make sure that the coins that actually flow through our platform have not been used for nefarious purposes, aren't tainted, don't have any sort of relation with wallets that are known to associate with terrorist financing, etc. And Ethereum and Bitcoin, because they've been around the longest, you actually have software and companies that are able to run this sort of coin purity check. For these newer coins that are coming out of the, younger projects, that isn't necessarily always the case. And the last thing that we want to do is be known as a company that will just trade any coin willy-nilly without any regard for where those coins have gone, or where those coins have come from, without making sure that they are clean.
Okay, and then, so what are the conditions for a coin to be basically listed and traded by OSLs? Let's say that, I don't know, we talk about Axie Infinity or other like smaller one, Dodge, which,
Yep.
yeah. Are you choosing to trade them because your clients ask you for it, or is it based on the volume or the market cap?
We always absolutely always listen to the clients first to see where there is demand for a certain coin. But on the OTC side, there are two real factors that we need to be able to that we need and able to be able to offer this to clients. The first one, I mentioned at the beginning that we have these variety of liquidity providers that are able to offer us various outlets for our trades. And we as an OTC desk, we want to trade in size. If you as an individual come along and want to buy $10,000 worth of Luna, that's not what we do. That's not what we're here for. If you come in and want to trade $10 million worth of Luna or $20 million worth of Luna, then we actually need to have those liquidity providers that are actually able to offer us a price. We don't hold any risk on our book. As soon as we book a trade with the client, we get the other side of the trade in the market.
Okay.
So that we're always kind of flat. So if we don't find any providers that can actually sell us these coins in size, we're not going to take the risk and take a position on to just be able to service one or two clients. Then,
okay. So I have some questions for that later on, but I will ask them after. What I would like to know is that, would you mind like sharing a bit what you do on your OSL channel, a bit of TA? And I think a lot of people were asking for that, if that's okay with you.
Yeah, absolutely. Let's dive in for sure. So every morning we'll look at the macro picture first.
Sure.
This chart is something that we all know. Logarithmic growth curve for Bitcoin. One thing that really interested me the first time I started looking at this and was just reading into it was just the fact that you seem to have these logarithmic growth curves that tend to pretty well or have so far at least have been pretty accurate in kind of showing or guiding you where the price of Bitcoin might move. Now, of course, you never, we might break out to the downside, and things can always change. But given, with the exception of the COVID crash back in March 2020, these lines have been, or this channel has been very accurate in kind of determining where Bitcoin prices might move next. We definitely kind of keep an eye on this just to give an idea of where the market might move. At the moment, everyone's very bearish. So what we try and look for are support levels in the market that we look out for that have held for long periods of time. So at this moment in time, if we actually zoom in, it's pretty clear that we're actually towards the bottom of this channel. So even if we do have some sort of sudden capitulation across TradFi where everything tanks 30, 40, 50%, which historically has then been followed by a month or two of V-shaped recoveries, we actually think that we are very, very, if not close to the current bottom of the market. If we can even take a look a little bit further out, we can just draw one support level coming through here. We'll take this out. So this is kind of something, this is a support level that we're looking out for, very similar from the previous all-time high back in 2013. You can actually see how, despite the kind of chaos that we saw on the COVID crash day, where prices dropped by 50, 60% with no real end in sight, you actually start to see that you could almost actually have predicted or kind of seen that ultimate support level in play. And this line, bear in mind, this line was drawn from the 17th of December 2018, so from the bear market low. So this line has already been in play for a long time. And having this sort of sight, this foresight, kind of trying to understand where the support in the market might be, actually then gives you the chance to kind of have real conviction and say, all right, this is a pretty macro level of support. If prices hits this, it is a definite time to buy. That is kind of the two.
So what's the kind of bottom price on your channel there? It's 35,000.
Yeah, we are looking roughly, no lower than 30K in our eyes. Even if you incorporate the Bitcoin logarithmic growth curves, it's actually even higher. So this is really what we're looking at. Anything between 31 to 33K would be an RIs, or is something that we're kind of looking out for as a pretty good buy area, or at least historically speaking, has offered good buy opportunities.
Okay.
So we have this curve. We have more short term now. What we've been seeing, what you will have heard a lot about is the debate about: are we in a bear market? Are we in a bull market?
Yeah.
What's going on? And I'm definitely of the opinion that right now we are not in a bear market. There's a very simple reason for that. Bear market looks, let's have a look. Bear market looks like this.
Yes.
Where you just have movement down, complete capitulation, no interest, and then an explosion. Same again here. Just prices moving down, eventually just dropped and started going lower, dropped 50%, and then started correcting. In both cases, you have these sort of structures. Right now, this is completely different. We're in a stage of the market where you're still in an overall upward trending corridor. Let me draw that out real quick. No, we're still in a market that, for all intents and purposes, is just trending higher. This looks completely and utterly different to this sort of price. If we were to start dropping off here and moving lower like this with no real push back to the upside, then you could start to argue, especially once we lose these lows of 28K, 29K that we saw in June of last year, then you can start saying, okay, we are actually in the bear market. But right now, this simply isn't the case.
And have we seen this kind of structure before? And is it like kind of historic in the?
It's relatively, I think it's relatively new to Bitcoin, or at least it's the length of it is relatively new. But you have similar sort of occurrences take place down here. We can zoom in on that in a sec. You could even argue that this market here, if you ignore the COVID crash, you start to have that similar sort of move. But it's just completely different. Now, of course, the one thing that I would say is that the crypto markets have not been around long enough to actually experience a prolonged bear market. The last real bear market that we had in TradFi was in 2008, where we had a year and a half of stocks just getting absolutely hammered. And that Bitcoin has not been around to experience something like that before. So that might be the only, I guess, fly in the ointment that could break down this sort of price structure right now. Right now, we're still trending higher, but the correlation to equity markets. I mean, take a look. You've got Russell 2000 at 0.87 for both Bitcoin and ETH. You've got the S&P 500 at 0.89, 0.91, NASDAQ 94, 95. These are correlations that just means that it's very likely that if we see continued weakness in the TradFi markets, then it's more than likely that Bitcoin and ETH and the entire crypto industry will also feel some more pain.
So that was actually, there was a question from someone who asked, like, do you still see correlations between stocks and crypto? That might be something that we are going to see in the next few weeks if the traditional stocks keep on going down. Yeah,
there is definite high correlation. But what's actually interesting, if we look at Bitcoin dominance, so normally a capitulation event in crypto markets, they're pretty easy to spot. So when we had the bull run in 2017, you had investment come into Bitcoin. You had that initial influx of investment actually then start to look into the likes of Link, as a Bitcoin Cash, Zcash, all those kind of dino coins that have been around since 2015, 2016. And you have this dominance of Bitcoin for the entire market cap just get completely and utterly crushed as investors moved into the space and essentially were looking for returns and outperformed Bitcoin's growth in the rest of the market space. This was true all the way until January 2018. That's when we peaked. Deck 2018, we had that peak, 20,000, it started dropping off, moved into that bear market. And as we can see here, as that bear market started to develop, you see that rotation of investors moving back from altcoins back into Bitcoin. And this is just shown by the Bitcoin dominance increasing, back from 36% to 50% in the course of a couple of months. We then had that exit, that dead cat bounce. Everyone was like, bull runs back on, jumping back in. And then that turned out to not take place. And that's where we then really started to see that rotation continuing as those speculative investors in the altcoin space essentially took their profits, headed for the hills, capitulated, and moved their coins back into Bitcoin. What we're seeing now, this is completely different to what we're seeing now. Again, we've had that correlate, or we've had that sideways moving or consolidating price action for Bitcoin for the last 6 months, last 9 months, essentially since November of last year. You would expect, when you see a 50% price drop in Bitcoin over the course of 6 months, people to run for the hills, cash their profits, move back into Bitcoin and wait it out. But right now, what we're actually seeing is that Bitcoin dominance still moving lower and constantly testing that 39% area. So the contraction of the crypto market is definitely happening as a general, as liquidity in general, capital in general is moving back from the market, but it's affecting cryptocurrencies at the same kind of pace, if that makes sense. There's no real fear amongst those amongst market participants, and we're not seeing that rotation of altcoins back into Bitcoin.
Okay, interesting. So it means that maybe the general traders or retail traders still have confidence on some of the altcoins and the projects that are out there. I mean, compared to 2017 and it's related to the chart, all the ICOs that we were seeing had nothing behind. So people realized it, moved into Bitcoin. If we are looking at some of the project, maybe layer 2 solutions, oracles, or other blockchains like Luna, we are considered as an altcoins. People still see quite a lot of value on them in the long term.
Yeah. Agreed. And you do see, the coins from 2017 that actually do have value. When you're looking at Link, for example, they have their own life cycle essentially. And even when you see Bitcoin going through a crazy bear market as it did in 2018, and then that consolidation in 2019, you had coins like Link just absolutely flying in their own universe, and just going from strength to strength.
Well, as a Link holder since the ICO, I remember I don't see the point of selling now.
Yeah, you're not wrong. But speaking of selling, I guess the one thing that everyone always wants to know is how can you time the market top when you start to see Bitcoin start to rally, and prices really start to accelerate. What can you actually look at to make a decision on when to sell?
Yep. If you know the reply, a lot of people are going to be interested.
Well, there's a couple of things that I myself am looking at as well. The very first thing I've already shown you is actually the logarithmic growth curves, which have historically pointed to pretty accurate levels for market tops. It's also interesting that this is why I didn't think that the tops that we've seen last year are actually this cycle's market tops. I think it's more than likely that we'll see another run up towards the end of the year. But you have this, and then you also have a technical indicator, which I stumbled across a while back, called the pi cycle top indicator. This is essentially the 111-day moving average, the 350-day moving average divided by the 111-day moving average makes pi. So that's why it's called the pi cycle top. The orange line is the 111-day moving average, and the green line is the 350-day moving average multiplied by 2. So the value multiplied by 2. And historically, whenever the 111-day has broken up through the upside of the 350, I'll actually change this to the day ticker so you can see how accurate this is. It's called the top by roughly 2 to 3 days.
Oh wow!
So this was we'll zoom out first. We'll go 2017. So this actually called it the day before. So when these lines crossed, it called it the day before in 2017. When we moved to the one that we saw back in May of last year, zoom in again, this one called it 2 days before. So these moving averages crossed 2 days before. We had that kind of intermediate. In my eyes, it wasn't the true cycle top. I think it was just an intermediate one, similar to what we saw in 2013. And if we zoom out and we go actually back to the highs, or to the two tops that we saw in 2013, 2014, here it was a week out. Let's have a look. Oh no, it called it the day after.
Okay.
And then in 2013, it was 5 days before.
So can you repeat the two indicators, the moving average?
It's called the pi cycle top. A good place to look at it is on look into bitcoincom. This is another really good website for trying to understand where we are in the market cycle. It looks at on-chain analysis. It looks at general moving averages. And this is where I found it.
Nice.
All free, all easy to look at. They keep it up to date. So it's for me personally, it's something that I will be looking at in the next run up to see when it might be a good time to sell.
Yeah, interesting. And thanks for the indications. And yeah, it looks pretty accurate so far for the past three tops, right?
Yeah, it didn't call the one in November only, I would say. Mm-hmm. But again, the one in May it called. I don't think that the high that we saw in November of last year at 69K was necessarily the market top for this cycle. I still think there's more room to grow, and given the increase in the Bitcoin addresses that we looked at previously, given the number of active addresses that hold Bitcoin, that entire network growth, the Bitcoins coming off the exchange, I just think once TradFi really kind of settles, and we start to see a little bit more strength and certainty, and a renewed run up in TradFi, Bitcoin is set for a serious supply shock.
Okay, and actually, I have an interesting question on the chat. Was saying that are your clients, are your hedge fund clients trading only crypto? I mean, crypto specialist hedge funds, or like generalist with a part with cryptocurrencies?
We're seeing the majority of our hedge funds are crypto native.
Okay.
But we are now starting to see family offices, especially in Asia and Australia, making that first move into crypto. So a lot of our time has been spent going to family offices that have made their fortunes in textiles, or something like that. And you sit down and you kind of go through, this is how mining works. This is how the crypto industry looks. This is what Ethereum does. And literally doing the hand-holding right from the very beginning to get them comfortable, and just a better understanding of how it looks. But yeah, I would say the majority of our hedge funds that trade with us are crypto native, and have been trading for a good 3 to 4 years.
Okay, so it might be, yeah. And yeah, some questions that actually have been answered at the beginning. So what's the minimum volumes to basically try to OTC? So you mentioned it's about 250K, right?
Yeah,
US
for
dollar.
us, yeah.
Okay. And I have a question, what is the main altcoin that your client has at the moment?
The big one that our clients are asking for at the moment, apart from Bitcoin and Ethereum, which we offer, big demand at the moment, definitely Luna. Just the hype around it at this moment in time, given the activities of Do Kwon and his treasury team, very much in demand. We now that they're starting to look into buying AVAX as well, we're starting to see more clients come through, ask for AVAX. Those I would say are really the two main, and then of course everyone loves Solana. So it's all those Ethereum killers. It's those Ethereum killers that have had some pretty meteoric years last year, where that demand is, and those are the coins that are large enough and do actually have liquidity providers that are actually able to trade it in size.
Okay, and someone asks, are you trading any layer 2 solution, Ethereum layer 2 solutions? You have two tokens?
At OSL, no.
Okay.
At the moment, we stick with L1, and normally we're kind of restricted in our wallet holdings. So yes, we can do layer 2s for Ethereum if we wanted to, but we're not yet seeing enough demand amongst the institutional client base to go through the onboarding process of those coins essentially offer it out to our clients. The name of the game in broking is volume.
Yes.
And if there isn't sufficient volume to actually generate revenues over a long period of time, then it's something that will not be looked at until that changes.
All right. And okay, one on the chat here is like, do you look into small market cap investments, and what do you look for in a project before making an investment?
Oh, it's a tough one.
Yeah,
It's I think doing
it's a personal choice, right? It's not.
Yeah, it's like you need to actually understand how all these smaller caps function. It's exceptionally hard to know. Like, I don't know many people who could actually tell me the ins and outs of a project and then compare it to potential newcomers, like really the ins and outs, the tokenomics, the founders behind it, whether the founders have done anything else, other past projects. Understanding the tokenomics, I think, is a very underrated tool to have, or skill to have. One I definitely haven't mastered myself. And I think when you try your best, you always think you have a coin, you think it's going to moon, and then it doesn't. And then you kind of watch as Doge and Shiba start to just move out of nowhere, and all it is that just that cult-like following, where that narrative, that hype and social media just takes control and takes those coins to new levels. But yeah, looking at individual alts, it's a very, very, very tough task to get right in my eyes.
And it's just a personal question because you mentioned it, but when I was the volume that was actually trading on a coin like Shiba, do some of those volumes are traded OTC or a coin like Shiba?
So we have some of our liquidity providers very agile in that regard. You see those coins start to pick up in volume, you see the demand come in, and LPs will then turn around and say, okay, we can offer it now. And they'll actually start making prices if you want it. Unfortunately, it's not as simple as turning a coin off and on. As I mentioned, we need to have wallet infrastructure set up so we can actually house inventory. We need to have legal opinions in place. The last thing that we want to do whilst we're applying for a license in Singapore and have those unique licenses in Hong Kong is start to trade any coin, because that I think will only end badly in the long run, and regulators won't look at that kindly. Okay, and couple of questions. And do you have any like Facebook page or platform to contact you in case they have some questions? Absolutely. I'm on Twitter. I'll share the handle afterwards. Not the most active, I'm more of a ghost. But active on LinkedIn. You can find me on Facebook. LinkedIn is probably the one I'll reply to on fastest. I mean, I think you have my LinkedIn details. Or I'll share it with you afterwards. Yeah, you can just actually copy paste in the chat if you don't mind for the people. Or I will do it while you reply to the second questions, to another questions on the chat, which is, will Ethereum merge boost the Ethereum price market cap higher than Bitcoin? So that's total speculations. That's a brilliant question. It's one that I've been asking myself for quite some time. There's always talk of the flippening taking place. Oh yeah, it's crazy. I think we'll get to the point where we're very close. I don't necessarily think we'll see it in this cycle, but in the future, certainly it's a high probability. If not Ethereum itself, then you'll have that entire L1 ecosystem, whether it's the top 4 coins, whether it's Solana, Luna, AVAX, Ethereum together, flipping Bitcoin to start. I think that will happen sooner than anyone expects. If you bear in mind that Bitcoin dominance is currently at 41%, Ethereum is at 18%, there's actually not that much left in it. Exactly. For that to take place. Well, it's going to be quite a moment in the crypto space. And I have one last question, if we have just 1 minute. Someone said,
will your biggest competitor be the bank soon?
That's a good question. Very good question as well. So regulation will there's no doubt that regulation will become much more prominent, and banks are set up to essentially be able to pick that up more or less straight away. In March, was it Joe Biden issued a landmark executive order on digital assets. You have federal legislation. You now have an ability for companies to actually come in and innovate in a regulated manner. But that said, we've been around in the crypto industry for a long time. Our network is, in that regard, unparalleled. We've also got the regulatory compliance. Essentially, that's what OSL is. We are purely facing the way that we operate and try to position ourselves is as the most regulatory friendly and cooperative crypto company out there. So we don't necessarily view banks and financial institutions as competitors, because the pie that we're fighting for is just growing exponentially. There's more than enough for everyone to go around. But we do also work with banks. We've partnered with DBS in Singapore. The exchange that they have, we worked on them with that. In the UK, we're working with Standard Chartered and setting up a crypto platform for their institutional and corporate clients. So for us, it's very important that we position ourselves as that cryptocurrency broker that faces or that works with banks alongside them and acts as one of the main brokers in that space.
And so if I see that, even if banks wishes in some part to trade cryptocurrencies, the moment and the time they will be able to do so, like natively, they are likely to pass through brokers like you for quite some time.
Absolutely.
Yeah. All right, and actually, I will share also on the meetup the link of Stephan for the questions that you had. But actually, it's quite a lot of information, super good points, indicators which I didn't know, and thanks a lot for sharing. I think it was quite useful, and to have your point of view as a head trader of one of the largest OTC traders was quite valuable for audience. Yes, and people are saying thank you. So thanks to you, Stephan. I really appreciate you taking the time. Again, why we invited OSL. I personally know the company since 2017. I can only say good things about you guys. It's not often in the crypto space, and the service is great. If you wish to trade OTC, you want to move some coins in and out large amounts, this is quite a good company to go to. So feel free to contact them. And really appreciate you taking the time, Stephan. It's more than 1 hour already.
My pleasure.
And thanks again, everyone, for joining for this one, which was on crypto trading and OTC brokerage. So we'll see you next month for another topic, and really appreciate it.